Hello traders and welcome to another video review. Today is Thursday, May 4th, 2023. Let's take a look at the Forex calendar today. As you can see, there's plenty of the important data scheduled for release for today. Some of them had been released already. Employment change and speech from the Reserve Bank of New Zealand Governor had already took place. As you can see, deep in the night, Caixin Manufacturing PMI data from China had been published already as well, but eventually the actual reading was lower than the forecast of 50.3 because the reading was 49.5, which is even lower than the previous reading of 50. Composite PMI and Srvices PMI data from the UK are scheduled for release at 10:30, and then we got the key event of today, which is the European Central Bank Interest Rate Decision. This event is scheduled for release at 2:15, and the market participants expect the ECB to hike from 3.5% to 3.75%. The deposit facility rate should be hiked as well from 3% to 3.25%, but the ECB marginal lending facility should be should stay in on the same level, 3.75%. Together with the interest rate decision, the monetary policy statement will be issued, and 30 minutes later we got the ECB press conference. Other important data for today are initial jobless claims from the US, scheduled for release at 2:30. ECB PMI data from Canada, scheduled for release at 4 o'clock, and 4:15 we have the ECB President Christine Lagarde to give a speech as well. So mainly today we will focus on the data release from the European Central Bank, and then of course data from the UK Composite PMI and Srvices PMI. So we will definitely take a look at the euro and the British pound as well. So let's start our technical part with the chart of the euro dollar. For our chart of the euro dollar is showing us this pair trading very high. The recent high was made apparently at the level of 1.1092, so we are very close to the technical resistance located at 1.1096, so only 4 pips away. And as you can see, these two red horizontal lines are of course the supply zone. First technical resistance is 1.1071, second technical resistance is 1.1096. So this area will act as the supply for the bears. Every time we hit this supply in the past, as you can see on the chart, we've been pushed lower. So far we got only one candle here, one red candle, but it's not closed yet. We still need an hour and a half to close this candle. So far it looks like a red candle. Nevertheless, this zone here is still kind of a horizontal zone, despite the fact that euro keeps making new high. Bulls are in control of this market. Nevertheless, there is no valid strong breakout to the upside or to the downside on the euro yet. We need to break above 1.1096 here, okay, above this horizontal resistance, or we need to break below the level of 1.0943, or then below this low for the 17th of the April, located at 1.0910. This kind of a breakout will give us direction for the euro in the coming days. So far, bulls are in control, momentum is strong, there is still a room to the upside. So in a case of upside breakout on the euro dollar, we need to see where is the next where is the next target for the euro dollar. Let's switch to the daily time frame chart to see it. In case of the euro dollar will break higher, let me see where is the next target. There you go. The next target is around the level of 1.1185, which is the high from the last day of March 2022. 1.1185. So that's the next target for the boost. But if we take a look at the daily time frame chart, it looks very topish here. Okay, So we might see some kind of again some kind of whipsaw trading to the upside, to the downside, to the upside, to the downside again, if there is no valid strong breakout towards the 1.1185. That's the euro dollar. Let's find out what's going on the British pound. So the daily time frame chart of the British pound doesn't show us a lot of volatility. We are trading towards the new high. 1.2583 was the last one. Now we are trading, of course, higher. There is still some sort of the positive momentum. So the bulls are in control on the daily time frame chart. We are trading above 50 and 100 daily moving average. Soon there will be more upside because the bulls are in control. How it looks on the 4-hour chart. So on the 4-hour chart, we are still trading above the 50 and 100 periods moving average as well. Recently we've made another technical high, marginal technical high. So we broke above 1.2583 and made a high at the level 1.2591. So that's a nice, like a 9 pips higher only, but still this is a valid high. It was made during the nice positive momentum. So the bulls are still trying to move higher. The bulls are still trying to move the market towards the next technical level. Nevertheless, there is still momentum, but the movement here is not that dynamic as it used to be before. The market keeps moving upside, keeps moving right to the upside. The swings are very nice. Nevertheless, it doesn't actually look like a strong impulsive movement. It seems like it doesn't have that much conviction anymore. This kind of a movement. We are still bouncing around the 50 and 100 moving averages. Nevertheless, this kind of a movement looks kind of a toppish as well on the British pound. So be careful during the data release, be careful during the Srvices and Composite PMI data release. The volatility might be bigger. The volatility might be, of course, more dynamic than it is right now on the British pound for our chart. So we are trying to make this kind of a red candlestick here. There's still hour and a half to close this candlestick. Nevertheless, it looks like we might have some kind of a pullback lower. Positive momentum still makes this market very, very susceptible to any kind of a bullish spikes. So there is still a room in the momentum, and there is still a room on the chart for the bulls to move higher. There is no doubt whatsoever related regarding to this situation. Let's find out what's going on the gold market, because it looks like just recently on a 4-hour chart of the gold market we got a breakout higher. We broke above the technical resistance located at the level of $2,048. The local high was made and at the level of $2,080, but this is as well all new. It's a new all-time high. Let me just switch to the daily time frame chart, because I'm pretty much convinced this is new all-time high on the gold. There you go. It's higher than two times. It's higher than the last one from 2022. 2069 was the last one. This one is 2080. So it's a new all-time high on gold. And what we have here is, as you take a look on the daily time frame chart, big pin bar is being built on the gold market. So please keep an eye on this candle close, on today's candle close, because this is a big warning sign for all bulls, saying that, hey, the bears are here. We just hit the new all-time high. The gold is very, very expensive. So maybe it is time for a bears to come in and show their strength. This is a first building, developing, progressing sign for the bulls, saying bears are present on this market. They are watching it closely and they might push it for another level, support level. Moreover, what we have here is a typical negative divergence between the price action here and the volume here, or momentum here. Momentum is going lower, price is going higher. Only one of these indicators will show us, will be true at the end of the day. It looks like the negative divergence is building on the spot gold market on the daily time frame chart as well. So that's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.